guys, this is Sandy. I'm a licensed realtor with Gift Group Sells Homes, and today I want to do a video for you on how to buy a home in 2026 while we're in this high interest rate market, and also there's so much uncertainties going on. There's the war going on in the Middle East and all different kind of things going on. Inflation is high. The feds are thinking of increasing rates even higher than what they are. We have no idea if they're going to go higher or lower. We have no idea what's going to be happening to fuel costs or any kind of oil or gas costs for that matter. So it's a lot of uncertainty in the atmosphere. But if you're looking to buy a home in 2026, and you must buy one because there's always people buying or selling a home for whatever the reason is, how can you be sure that you're making the right decision, number one? And number two, how do you go about getting the best deal in this particular market, especially if you're financing, right? So this video is kind of going towards you're trying to buy a home or you want to buy a home in 2026 and you're going to be financing. How do we go about that? That's a great question. So let's get into it. So as we know, in the market we're in right now, builders, which mean if you're looking to buy a new construction home, builders are given a lot of incentives when it comes to new construction home. They're doing a lot of buy downs, temporary buy downs, permanent buy downs, paying your closing costs for the most part, which they typically do. They're throwing in a lot of incentives, right? But what does it mean to buy down a mortgage rate? What does it mean temporary or permanent? How do I even know the difference, right? And if the builder is saying they're going to pay my closing costs, are they just paying the closing costs to buy the rates down, or are they actually paying all of my closing costs? How do I do this? And if I don't want to buy a new construction home, I want to buy a resale home because I may want a pool or I may want certain things that a resale home has that a new construction home would not have initially going in, maybe the landscaping, stuff like that. Or maybe you can't afford to buy a new construction home. So we're going to dive into those two scenarios. One, if you're doing new construction. Two, if you're not. So let's choose one. Which one should we choose? Let's do the new construction one first. So how do you get the lowest interest rate in 2026 buying a home? And we're going to be talking about new construction home. So each builder is different, and not every builder is going to be giving you the same incentives. So one of the thing is find out what you're qualified for. That's going to be number one, no matter what. Make sure you're working with a realtor. And the reason why I'm saying this is not because I'm a realtor, but because in working with a realtor, they're going to have the inside knowledge as to what builders is giving out what. Because when a builder is coming up with a crazy incentive or an incentive that they know no other builder is offering, they are going to call all realtors first or send out a blast email or a blast text or whatever connection we have with them to let us know, hey, if your buyer comes in and buy by this date, this is the incentives we're going to give them. So the realtor would know. If you want to do your own homework, you could actually go to different new construction developments. You could call different builders. The only thing I'm going to caution you on is not to sign anything with them until you talk to a realtor or until you're able to gather all the information. Because the minute you go into a new construction development and you start asking questions and they realize you're not with a realtor, they're going to try to get you to sign stuff or to fill stuff in. Don't do any of that stuff. Just ask as many questions as you want to ask and then move on to the next one. Why? Because later on down the line, if you did all your homework and you now decide that you want to work with a realtor and you already signed with that builder, the realtor and this kind of tied, and they're going to say, no, you weren't the first one that brought them here. They came here before and they filled this form out. Once you put your name on a form, the builder may not allow you to work with another realtor. Okay, so that's super important. So you could do your homework, do whatever it is. But a realtor is going to have knowledge and they will know what builder is offering what incentive at what particular time. So we may have a builder that says, hey, if we get a buyer on the contract by the end of March 2026, I'm doing this video, today's the 23rd, I think. So let's say they say, if we get someone on the contract, if your buyer comes in and go on the contract by March 31st to buy a home and they close by May or whatever the time is that the home will be completed, then we will give them XYZZ, whatever it is, right? So that's one incentive. Another incentive is builders are more likely to give a better incentive on a home that's already built. So the home is already built or it's about to be finished. So they'll say stuff like, we have these homes, they're going to be completed in May. So if you could close in May, this is the incentive. If you're going to buy new construction and you're going to be buying it to be built, like you want them to build it and you want to put in your own stuff, you're going to still get an incentives, but it will be less than if you were buying something that's already built. Also, let's say they have what is called inventory homes, right? They may call it a spec home or inventory home. And what that means is someone was buying the home and their financing fell through, and the builder does not want to, or they do not want to keep that, they're not in the business of keeping homes, right? They want to sell homes. So if they were doing a transaction and the buyer could not close for whatever the reason is, they're going to have a better incentive on those kind of homes. So when you go into a builder's development or on a building site, you want to find out, do you have an inventory home? Do you have any special deal on any property whatsoever? Are you giving any special incentive if I'm able to close on by a certain time, right? Very important. Now, the next thing you need to remember is when you go on the site, the builder is going to want you, in order for you to take advantage of most of the incentives that they're going to be giving you, you are going to have to use their preferred lender. Why? Because they want to keep the deal in-house and they want to have control. They don't want for you to go under contract and then, after you go on the contract after a few weeks, you come up with, well, I can't close, or your lender that you're not using with them give you an excuse. You go to the lender, you're like, listen, I don't really want to buy this home. Can you get me at this contract, right? And the lender send you a letter. They don't want none of that stuff. So they're going to want you to use their lenders. Not only that, but the lenders that work with the builders can give you more incentive because they're closing such a bulk of homes, right? There's all these homes in this development and they're closing every single one of them. So there's discounts in volume. So the more homes they're closing for the builder, the better incentives that they could give to you, right? Does that make sense? So that's kind of where that is. So you definitely want to find out if there's any incentive going on, if there's any kind of special financing going on. If you buy by a certain time, do they have any incentive going on? Those are things you want to ask. Now, they're going to say, yeah, we're going to do a buy down, right? Once we get into that. So let's start talking about buy down. What is a buy down? What does that mean? It means that the builder or the seller is going to be buying down your rate. So if the rate today was at 6.5%, they might say, we're going to buy down your rate. So when you close, you're only going to be paying 4.99% or 4.5%, depending upon how much they're buying it down, right? Now, we have temporary buy downs and we have permanent buy downs. Permanent buy downs are going to be more expensive because that means the rate is bought down from the day you close, the rate will be permanent at that point on, right? So that's one buy down. Another buy down is temporary. Temporary meaning we're temporarily reducing the rate, maybe for the first year if you've been in the home. So for the first year, you might not pay the full rate, you might pay 1% less. But they also have what we call a term buy down. And term buy down is where they could do like a 3-2-1 or a 2-1. What does that mean? That's very confusing, right? Okay, so a 3-2-1 mean you're going to get possibly paid 3% less in the first year. The second year, you're going to pay 2% less. The third year, you pay 1% less. And then the fourth year, it kicks into whatever that interest rate is. So whatever the interest rate is at the time when you sign the contract, you're going to do a 3-2-1. You're going to buy 3% down for the first year, 2% the second year, 1% the third year. Now, some of those 3-2-1 buy down or 2-1 buy down could be in the year that the buy down is completed, you're going to have to pay the interest rate that is available at that time. So you got to be very careful that you understand once the buy down is completed, where is your interest rate?
This program is brought to you by Gift Group Sells Homes. Need to buy or sell fast? Make one call, that's all. And put our 23 years of experience to work for you. Gift Group Sells Homes is the way to go. Call for 07-791-4713.
Are we talking about today's interest rate for an example of 6.5%? So if I bought a home today, let's say I close on a home next month, and I did the 3-2-1 buy down, and the regular interest rate was at 6.5%. It means the first year I'm going to be paying only 3.5. The second year I'm going to be paying 4.5. The third year 5.5, and the sixth year is going to kick back to 6.5%. So I have a 4-year leadway there. In order for them to do that, a lot of times you got to pay the buy downs, you're paying it up front, right? You're paying all the savings that you're making. So instead of paying 6.5% the first year and you're paying the 3.5% the first year, that 3% is being paid upfront in the closing. And what you need to know is who's going to be paying for that. Is it going to be you or the builder? Who's going to pay for the buy down? Most of the time, the builder will be paying all those buying downs for you. So we have a 3-2-1, and then we have a 2-1. 2-1 is pretty much similar. If the interest rate is at 6.5% today and we're going to do a 2-1, it means the day you close, you're paying 2% less, you're going to be paying 4.5%. And in the next year, you're going to be paying 1% less, you're going to be paying 5.5%. And then in the following year, it's going to jump into 6.5, providing you understand that's what's going on. So a buy down can be a very good thing to get you in the home, as long as you are able, and a lot of lenders will make sure you're already qualified for the 6.5%, so that when it finally kicks in, they know you'll be able to pay for it, right? So that's all that's qualified up front. It's not a matter of you got to go qualify for that after the buy down has ended. So that's what a buy down is. All right. So this is on the builder side. So on the builder side, we understand we could ask for different incentives. The builders may buy down your interest rate with a 3-2-1 or a 2-1 or a 5-1 or whatever they're going to do. Just make sure you understand how it works and understand, is that going to be a part of your closing costs? Is the builder paying for that? Another thing to understand is the builder going to pay for the regular closing costs plus the buy down closing cost? Or are they only paying for the buy down closing costs and you're paying your regular closing costs? Right? That's super important, because those are two different costs. You have a financing cost, and then you have your regular closing costs to actually close on the home. So you need to know how that's going to work out. All right. Now that we have explored the new construction, let's explore resale. Now let's explore resale. So now we're going to buy a home in 2026. We're not doing new construction. We're buying it from a regular seller. They don't have any rate buy down or anything like that. What are we going to do? The first thing we're going to do is we're going to go to our lender, because I'm assuming that you would have been pre-approved already. You're going to go to the lender and you're going to say, listen, if I can cut a deal with the seller where the seller is willing to help me with my closing costs, can we do a rate buy down? And if we do a rate buy down, how much will that mean? So how much would it be so that I'll be able to go back to the seller and negotiate that? So let's say when the lender is like, okay, today the rate is 6.5%. You could probably do a rate buy down. You could do a 2% or a 1% buy down, and this will be the cost of that buy down. Let's say the cost is $10,000. I'm only using even numbers because I wanted to make it simple. So then you'd be able to go to the seller and say, look, Mr. and Mrs. Seller, I really like your home. I want to buy it. Or your realtor will be presenting this on your behalf. I really want to buy your home. Can you contribute $10,000 towards my closing costs? I already spoke with my lender, and they said it's okay if you're able to contribute this $10,000 towards my closing costs. That way I'll be able to buy the interest rate down by 1 or 2%, whatever that percentage is. And that will make it better for me to be able to afford your home. Would you be interested in that? Now, more than likely, if you're going to go to the seller and ask that question, you do want to give them a comfortable offer. So you got to decide which one is best. Do you want to negotiate for a lower purchase price, or do you want to keep the purchase price but negotiate for money at the closing table so you could lower your interest rate, as long as the lender agrees and the lender says it's okay and the seller is okay with that? So in today's market, I would more go for getting the money at the closing table. Of course, I want to negotiate a good purchase price. Of course, that's very important, right? So you want to make sure your purchase price is in line with the comparables for that area. But my thing is, let's say the home is selling for $350,000, right? And you know that your agent, your realtor, or you do your own work, and you know that the other homes in the area are selling for $350,000, so that's a fair price. Do you want to offer $340,000, or instead of offering $340,000, go to the seller and get that $10,000, as long as your lender agreed to it, to be taken towards your closing costs? That would make better sense to me, because instead of, because a $10,000 reduction over a 30-year period is not that much at all. However, $10,000 upfront to lower your interest rate is a bigger deal in the market we're in right now. So every market is different, and we have to pivot to the market we're in to get the best deal possible. So in this particular deal that we're talking about, based upon the purchase price, it's probably better to negotiate with the seller to have them help you pay your closing costs, especially buying the interest rates down at the closing table, as opposed to trying to beat them up on the purchase price. And guys, we got to be fair. We can't get the best of both worlds. We can't have, the seller's not going to give us the lowest price and then plus help us with our closing costs. Like, that's not going to happen for the most part. It could, but for the most part, maybe not. So you got to pick your poison. What is my poison? Do I want to pay the market value and have the seller help me at the closing table with my closing costs, as long as my lender is okay with that? Or do I want to get a lower purchase price and then I'll just deal with the interest rate? Whatever the interest rate is, I'll be cool with that as long as they give me a low purchase price, right? Which way do you want to go? I will tell that a lot of sellers, if they're getting the price that they want, if they're getting the market value price, more than likely they will be more willing to work with you and actually do an interest rate buy down with you. That's why it's so important for you to go with your lender and say to them, listen, I know I qualify for this 350 as an example. I'm trying to find a seller that will, work with me to try to to lower my interest rate. What am I looking at, Mr. Lender? How should I position this? Should I, if I wanted to do a 3-2-1 buy down or a 2-1 buy down or some kind of, or a permanent buy down with a 1% buy down, most of the time the permanent buy down are not going to be as interested as the temporary, because the temporary buy down is what it is. It's temporary. The permanent buy down is for the length of, is for the, the age of the loan, in the life of the loan, right? So the permanent buy down is going to be more expensive and less interest rate coming down, less points coming off. So if the interest rate is at 6.5% and you're wanting to buy down 1% to make it 5.5, it's probably going to be more expensive than if you did a 2-1 buy down, a temporary 2-1, meaning you're paying 2% less in the first year, 1% less in the second year, and then it kicks, the interest rate kicks in, whatever that interest rate it kicks in on the third year. So it depends upon how you want to structure that, right? So, and it depends upon how long you think you're going to be in the house for. Because we can't predict what's going to happen. Even a 3-2-1 or a 2-1 buy down, we have no idea what's going to happen in the year that it actually kicks in, the full interest rate kicks into being. However, as long as you're qualified for it in today, the day you're buying the house, you're already qualified for it. So even though you're not paying the full interest rate, you're still qualified for it and you can afford it. Then that means when the interest rate actually kicks in, then you will have no problem because you're already qualified for it. And it's not going to be like 2008. A lot of people have to tell me this. Remember in 2008? Complete different story, because you qualified from day one. In 2008, 2009, when the market crashed, people were qualifying for low interest rate and variable interest rates. And when the interest rate kicked up, right, it increased because it's a variable rate. So when the rate increased, they could no longer afford the home. And they did not buy the home based upon qualifying for the higher interest rate, because a variable rate, you don't know where it's going to go. It's based upon the current index of the market at that time. So you have no idea where it's going to go. Whereas a buy down is a completely different story, because you're qualifying for the interest rate on the day you purchase the property. They're just making it easier for you to have lower payments for a few years until it kicks in, right? Until the actual interest rate kicks in that you're qualified for today. So those would be the two ways to go. It's only two ways. You're going to buy new, you're going to buy resale. Those would be my approach if I was buying a property near in the 2026 market, is either going with the builder and negotiating with the builder for a lower interest rate, or negotiating with the seller, provided I go to the lender, because each lender is different. Each lender will structure it differently. They might tell you, you can't do a buy down, you could do a buy down, this is the way you got to do the buy down, this is the price, all this kind of stuff. So you need to get that information from the lender on a resale before you approach the seller. For the builder, they already have their lender in-house. The lender already tell them what they can do, and that's what they're going to go with. Okay? Thank you so much. This is a lengthy video. I appreciate you staying with me and listening to the end. If you find this information valuable, please like the video. You could also share it and click the little notification button when we put out a new video. Our information should be somewhere up here. You can give us a call, send us a text anytime. We do complimentary Zoom calls, complimentary calls, if you want to ask any questions about how to actually structure this. Thank you so much, guys. I will see you on the next video.
This program is brought to you by Gift Group Sells Homes. Need to buy or sell fast? Make one call, that's all. And put our 23 years of experience to work for you. Gift Group Sells Homes is the way to go. Call for 07 791 4713.